traders, how are you? Vladimir here from Home Trader Club, and in this video I would like to share with you my weekly forex forecast. Today we are preparing for the trading week starting of 21st to 25 of August. So there are four very interesting instruments I would like to share with you. This would be the New Zealand dollar, Swiss yen, the oil, and the Australian dollar. All of this, I believe, could be amazing opportunities, and I want to explain why. So let's start with the first instrument, that would be the New Zealand dollar. Before the charts, I would like to take a look on the numbers, how the numbers look like in terms of the New Zealand dollar on pure price. Okay, so take a look on the New Zealand dollar. I'm looking at the market trend snapshot. That's one of the great features we have in Home Traders Club. So take a look here. The 1 month is in a very negative momentum. The 7 days also way above the 1%. Okay, actually above 2%. The only thing we start to see is 24 hours making some sort of a pullback correction or attempt for correction. Usually such numbers fit for trend continuation. Okay, so which is the trend? As you can see from the numbers below here, it's clearly that the bears are in control. Buyers are trying to do some corrections, and that's usually a sign that sell the rallies. Now what I love to do is to go to the charts, and I love to combine the technical analysis together with the numbers. Okay, and if they fit, that's where I love to find my opportunities. So take a look, what do we have on the New Zealand dollar? Okay, in terms of price, what do we have here? If we start from the weekly time frame, okay, it's obvious. This is yet a bearish trend. Okay, the sequence of the the sequence of lower highs, lower lows is there. Okay, it's pretty obvious. We got one wave of pullback, yes, but the trend never managed to flip. So the bearish trend is still here. Where will that end? How will that end? Time will tell. But at the moment, it looks like it's far off it. So for me, sell the rallies looks like a legit direction, I would say, based on this pure analysis. Okay, the first thing our eyes catch. Going down to the daily chart, and the picture is not different. We do have the lower highs here, swing lower highs, swing lower lows. It's all there. So we can also see that there are no ending conditions. These lows are clean. The lows on the moving average of the MACD are clean. The lows of the RSI are clean. Nothing seems to stop it. If we take a look on the Bollinger Band duplication, okay, from the moment of the breakout, okay, take a look at the duplication of this range. This Bollinger Band is my indicator I use. You can see this and all the other indicators I use. You can see many of them on the screen right below this video in that description. Okay, take a look where the duplication level is right here. Now that's pretty much where I would expect the New Zealand dollar eventually to drop down to. The reason is not just the Bollinger Band duplication, of course, but also that there is a big area of buyers here. How do we know? There was a previous bearish trend, sequence of lower highs, lower lows, and that's where the trend changed. Higher highs came in play, right? From this moment, what happened? Sellers tried and buyers rejected. So this is a classical zone. First strong push by the buyers, sellers are trying to reject, and again, buyers continue to control, right? So this is an absolutely strong zone. And as we get closer, this is where a bounce on a short term will happen, after which we will be most likely continuing to the bearish direction. So taking a look on that and going down to the 4-hour chart, this is what I see on this instrument. Okay, again, the trend here is absolutely clean. The only thing we do see that while the market is still making lower lows, indicator starts to show some higher lows. Usually this is a sign that we are reaching some place where a correction is due. Okay, so I do believe the correction will start to happen as soon as we get close to the area I showed you before from the daily and the weekly chart. Okay, from this moment the correction is very likely to happen. But the question is it only correction or is it the trend change? So as we saw based on the previous analysis, the daily and the weekly and the monthly numbers I showed you before, that does not look like the trend is over. So sell the rallies here for the long term is the plan. Some key levels on the way. First of all, of course, the most recent resistance. Okay, and then of course we have the broken support, which now behave as a resistance. And same is said above this with this area. Okay, broken support now become as a resistance, and both of these levels here and here, both of these resistances are together with massive volumes area. Okay, so pullbacks are due, very likely. The closer we get to the daily and the weekly levels I showed, and from there, sell the rallies would be the plan. Let me know what are your thoughts about the New Zealand dollar. Will we get down to 0.58 or 0.57 first of all, or did we already see the bottom and the price is going up to above 0.61? Share with us in the comment section. The next instrument would be the Aussie dollar, okay? And it's pretty much similar to what we just saw on the New Zealand dollar. Take a look on the numbers. It's obvious, it's screaming that the sellers are in control. The monthly is 4% in the negative direction. It's a beast. Okay, the 7 days, the last 7 active days, it's close to 2%. Only 24 hours is pretty much flat. So if we observe the chart, here is what we will see. Exactly like the New Zealand dollar, the Aussie dollar has a clean sequence of lower highs, lower lows. So I believe the Aussie dollar is making its attempt to go all the way to complete this cycle for the long term. Okay, I don't know how low it will reach, but I am pretty confident that the bottom is not yet reached, which means based on that analysis and the numbers we saw before, right, in the home trader members area, based on the trend market snapshot, sell the rallies here makes absolute sense. So going to the daily chart, and again, keep it simple here. Okay, take a look on the sequence where the lower highs and lower lows, or higher highs, higher lows, which is the sequence, right? What is the sequence that right now we see in the market? And it's pretty clean from the weekly chart that the sellers are in control. It's pretty clear from the daily chart that the sellers are yet in control. There are no ending conditions. Okay, you can see here it's potentially create some sort of a bottom here, but that's far, very far from reversal. Okay, also on the other side, still nothing. So that makes me think that, yep, correction is very welcome, and I will explain why I would expect it, but I will use this correction to go on to sell the rallies. So here is the interesting part. Using the same Bollinger Band duplication principle as I showed on the New Zealand dollar before. This is the most recent breakout we had on the Bollinger Band. Take a look where the duplication zone is, right next to these lows. So taking into consideration that there are no signs against the current bearish momentum, right? And unlike here also we got a breakout, but it immediately blocked with a bullish divergence. Now in that case, we don't have anything, which makes me think there is more to come. And this zone is very, very possible area that the market will try to reach. So take a look on the 4-hour chart. This is also like the New Zealand dollar, showing us that right here with this divergence, right, that the current momentum is slowing down. And yes, a correction is very welcome. Okay, while the market is making the lower lows, lower highs, we can see how it starts to round. If here we gain the momentum, here we start to lose momentum. Usually when the momentum is losing, the correction is due. Okay, so again, at the moment, there are no signs it's over. But once this correction takes place, that should be the great opportunity to look and to join the trend, ride with this ongoing momentum to the downside. What are the key levels in play here? Broken support now acts as a powerful resistance. Falling trend line, falling trend line or resistance line on the go, and of course the previous broken support and the supply area here. A lot of money is in between this area. Okay, broken support becomes a resistance and area of supply. Sellers take control. How do we know? Buyers try to push, sellers maintain the level. Buyer try to push, sellers push down again. Absolutely key level. So any pullback towards this zone, and we should be looking for further bearish continuation on this instrument. Okay, so this is my view on the Aussie dollar. Sell the rallies from these two key levels. Of course, don't just jump in the level, take a trade, and like I hope for good. Doesn't make any sense. Okay? Wait for the signs. Let the market do what the market has to do. Let the market create the setup for you. Create the bearish evidences for further continuation to the downside, and then go and join it. Okay, but don't try to guess where will be the reversal and hope for good just by pressing the button. That's a mistake traders do. Avoid it. Let me know, what do you think about the Aussie dollar? Are we going all the way to the new low, or at least the previous lows we saw from daily and weekly chart? Or was the bottom created and we will see the price climbing all the way towards the 0.70 again? Share with us in the comment section below. The next one I would like to share with you is right this one of the hottest pairs after today, the Swiss yen. The numbers, pure numbers, show that there is a potential of a reversal. Take a look, what do we have here? Okay. Monthly, absolutely beast on the bullish direction. Okay, above 3%, but the daily shrinks to below 1% rally. 7 days. Daily comes negative to close to 1%. That's usually signs of a potential beginning of a reversal. So let's see if it fits with us in the technical view. So on the technical view, what do we have? This is where the most recent weekly Bollinger Band was broken and makes the rally. We're very close, as you can see here, to a double duplication. The price also holds the 165, which is a round psychological number. While the market is climbing and making higher highs, indicator starts to show slow down and making lower highs. Okay, not sure it is enough for a full trend change. Most likely this is what should happen next until some major bearish divergence would be completed. But it is really great zone to start looking for this reversal, and to take that together with what we just saw in terms of numbers, and it starts to be like a good opportunity. Going down to the daily chart, and we can see how clean this slow down becomes. Okay, the market is making the higher highs, higher lows, but a bearish divergence is there on the moving average of the MACD and the RSI. And take a look on this beautiful candle pattern reversal from higher highs, higher lows to lower highs, lower lows. Again, usually this is a very good technical sign. So what I would like to see here on the lower time frames, especially after the market made some sort of a double top here, I would like to see some setups. Okay, so for example, a two waves correction or some sort of a range correction, and then looking for the breakout and sell taking place. What I do like at the moment is the fact that we do have lower lows, couple of them right now on the chart, and that's a strong money zone here. Okay, you can see here a lot of consolidation. Okay, sellers are holding below that, so as long as this zone holds, any pullback, there's two waves or a range, should provide a next further sell. Okay, what should we be careful with? If this zone is not respected, let's say the market makes that and climbs above this area again, that means the sellers fail to reject this area. And that might be a hint that we will see a final rally before the reversal, like one more fake high before a deep reversal take place. These are the two scenarios I would be following on the Swiss yen. I believe correction is due, and we should see the pair pushing down. And this push down could be pretty strong one that will lead to a several hundreds points move down. What do you think about the Swiss yen? Did we see the top? Or is there more to come? Share with us in the comments. And the final one is oil, which I believe could be also very good trading opportunity. So let's go to the longer term, okay, before we start to talk about any of the short term, and I want to talk about the numbers here. So take a look what happens with oil. We did have three waves down, and we do have here a bullish divergence. So a correction is very possible scenario. Usually correction come in two waves. Sometimes correction come as a range before any other trend would be defined by the market. Okay, so I believe we are right now in a bullish correction movement. The question is, that's for the long term, right? What and how does that look like on the short term? So on the short term, the market did hold this strong supply area, okay, and delivered a legit move down. This move down comes all the way to this very strong volume profile based supportive zone. That's very strong area. Now, the question is, are we ready for the buys? Because for this sort of buys, we do want to see the 4-hour chart presenting us the buys. Okay, and the 4-hour chart at the moment does not have that. It does have here a sequence of lower highs, lower lows with some sort of two waves correction. Okay, and all that after the most recent rising trend line was broken. So what does all that mean? So the way I see that, we do have currently a pretty strong supportive area on oil around the 78, 79 zone, which did hold and bounced right from. So the question is, what's coming next? And there are two scenarios which I will be looking to trigger. The first scenario is the very classical three waves down, ABCD correction back to any of these key levels as long as they hold, and a breakout. Okay, break of the trend line, break of the low, and that should be a great move down to the next important level around the 75. Why specifically around the 75? Well, not just the round number, but also this, we can see here this range, right, where it was broken. It was actually behaving here like sort of a triangle, right, where a lot of buyers, right, put in their money before the price made a dramatic rally. Besides that, that would be if we plot Fibonacci on this recent rally, you will see that all that is around the 50% Fibonacci. Well, that happens for a reason, of course. So that would be the ideal scenario, okay? To join the ongoing trend, get this corrective price movement, breakout, and continuation towards the desired area. But there is also a very possible scenario that the buyers manage to hold here. And if they do, okay, and the market managed to start climbing above these broken supply areas, right, that's a sign that the buyers are yet in control. Then the plan changes to buy the dips, okay, and to join, so basically something like that, right, like that, pull back and continuation, and to join this ongoing momentum. Then if that happens, our next kill zone is these two swing highs on the way. The first one around the 90, next one is around 97 or maybe even higher. Okay, so if we do manage to hold this supportive area I was talking about currently, then it could be a great sign of continuation. Okay, so that's the two scenarios I follow. Once again, ideal one for me would be if we manage to get a trigger, make the drop back to this broken triangle zone, and from there look for the buys. But not always the market is Mr. Ideal. That's why I wanted to explain the second scenario as well. So that would be it for this video. Thank you very much for your time watching it. I hope you find value in this one. And if you do, please hit the like button. Feel free to share it with anyone who you believe can benefit watching this video. This is open for the community. Your like button and few words in the feedback section would make a big difference. So thank you very much for your support in advance. And I want to invite you to join us in our trading family, Home Trader Club, where you will get your access to our full trading courses, real-time trading education, real-time trading opportunities, access to the community, myself, my team, and so much more. And once you are in, just make sure you go to the education and where to start. Okay, then go and follow the courses for beginners, advanced, and the full free courses we have here also for beginners and advanced. Then inside the media zone, you would find full comprehensive list of webinars, our live trading sessions we have on the weekly basis, and so much more. Okay, our trading journal, and again, everything is there for you. So once again, thanks for your time. I wish you a wonderful weekend and great trading week ahead. I'll see you around. Good trading and bye for now.